9 months in, the boxes are finally unpacked, your tan is coming in, you're starting to adjust to the cost of everything, and then a question comes up. Maybe it's from the rental, maybe it's from the old 401k you just left behind, or maybe it's just from taxes. So you call your advisor, no answer. You play phone tag for a few days, and then finally an email. Hawaii is a little outside my realm. That's it. So I want to talk about that moment, because that moment, it's not rare. It actually comes up in conversations all the time, especially with people who just moved here. There are 5 financial realities about living in Hawaii that most people learn too late. And so today, I want to make sure you learn them early. My name is Ethan Ho. I'm a certified financial planner and the founder of Claw Capital Partners here in Hawaii. I spent over a decade doing financial planning with people navigating major financial life and changes here in Hawaii. And to be clear about what this video is, it's not a video designed to scare you away from moving to Hawaii. I live here, I love it, and I believe with the right financial preparation, it's one of the best places in the world to build a life. This video exists so you can arrive ready. And if you find that helpful, hit subscribe so you can follow along. Now let's get into it. Before I get into the 5 surprises, I want to show you the other version of this story. I recently spoke with someone who is planning on retiring in Hawaii in a few years. He has been planning this since 2015. And last month he told me he almost merged all of his retirement accounts into one account. Before watching one of my videos explaining a Hawaii-specific tax issue with retirement account structures, he stopped. One piece of information changed a decision that could be very difficult and costly to unwind, and that would have followed him through every retirement distribution for decades. And he's not even here yet. This is what preparation looks like. Not luck, not a higher income, not something complicated, just knowing the right things before you need them. These 5 surprises are the things that I wish every person knew about Hawaii before they arrived. The first surprise is the one that blindsides people most often. Not because it's complicated, but because it feels like it shouldn't be true. You have an advisor, you have an accountant, you have relationships that you trust. And then you move to Hawaii and you find out that those relationships were not built for this. Hawaii has a set of financial rules and a way of doing business that most mainland professionals have just not encountered. The general excise tax, the transient accommodation tax, the retirement income exemption structure, and the account separation rules that can significantly affect your tax situation in retirement. The estate planning execution challenges with local banks and institutions. Most mainland advisors and accountants, they're not incompetent. They are just outside their lane. And the most costly version of that is the professional who does not know what they do not know, who keeps advising you with a framework built for another state that doesn't realize it doesn't transfer here. There's also a logistical reality that's worth naming. If your advisor is in the Eastern time zone, they're 5 to 6 hours ahead of you here. Hawaii doesn't observe daylight savings time. Getting a same-day response to a question that matters is harder than most people expect. Now, this is not a reason to end every professional relationship that you've built over the years. It's a reason to add someone local. Someone who knows this landscape and can work alongside them or fill the gaps they can't fill. Find that person before you arrive, not when you're already scrambling. The second surprise is one that almost nobody knows about here until they are already obligated. Hawaii does not have a sales tax. What it has instead is the general excise tax, the GET. And here's why it matters. A sales tax is paid by the buyer on the purchase price. The GET is different. It is a tax on gross business activity, paid by you as the business operator on every dollar of revenue before you deduct a business expense. That distinction is significant. If you have rental income here, you owe GET on the gross rent collected here, not your profit, the gross amount. The base amount is 4% with a county surcharge of 4.5%. And if you're running a short-term rental through platforms like Airbnb or Vrbo for stays under 180 consecutive days, you also owe the transient accommodation tax on top of the GET. And the state TAT rate is 10.25% on your gross rentals. And here's something that is worth understanding on how GET actually works in practice. Although GET is a business tax, businesses routinely pass it down to customers. So when you buy a car here, hire a contractor, pay for professional services, the GET is often built into the price that you pay, embedded and sometimes feels invisible. It is part of why everything feels more expensive here, even beyond the sticker price. If you have any income generating activity in Hawaii, a business, a rental, a side hustle, you need to register for a GET license and understand your filing obligations before you start collecting revenue, not after your first tax season here. Before. And before we get to the last two, I want to flag something. Surprise number 4 is the one that actually surprises people in a good way, so stick with me. The third surprise is the one that most people think they already know. Hawaii is expensive. Everybody knows that. But knowing it, living it, and actually budgeting for it are very different things. According to recent cost of living data, Hawaii consistently ranks as one of the most costly, expensive places to live in the entire nation, with a cost of living index at 185 with a national average of 100. Household costs in Hawaii run roughly $141,000 a year, the highest in the nation. Groceries, they run about 30% higher than the national average. Average monthly utilities include some of the highest rates in the entire country, often running $500 more per month just for electricity. Housing costs are roughly double more than the national average, depending on the island and the area. But here's the part that most people miss. It's not just groceries and rent. It's the cost of staying connected to the people that you left behind. A last-minute round-trip flight to the mainland for a family emergency can easily run $800 to $1,500 or more. Of course, depending on timing and where you're flying. If you have aging parents, grandchildren you want to see regularly, if something unexpected happens to a sibling and you want to be there quickly, that is a real, reoccurring cost that almost nobody builds into their Hawaii budget before they arrive. Now here's the honest other side of this. Hawaii is often where people go on vacation. You live where they vacation. So when you live here, that vacation budget, it often disappears. That $10,000 annual trip to Hawaii that you used to take, gone. And for many people, that lifestyle shift away from consumer spending, the outdoor life, the free or low cost activities, the slower pace, it genuinely offsets a meaningful portion of the cost difference. But that shift, it has to be intentional, and the budget, it needs to be honest. Know the realistic number before you arrive, not after the first year when the reality sets in. The fourth surprise is one I actually enjoy sharing because it goes against what most people assume. Most people moving to Hawaii assume that the tax picture here is punishing. High income tax rate, expensive state, must be terrible for retirement. The reality is more nuanced than that. Hawaii, it doesn't tax Social Security benefits at all. Employer-funded pension income is generally exempt from Hawaii state income tax. Hawaii also has one of the lowest effective property tax rates in the country. For a retiree with Social Security, a pension, and a paid-off home, Hawaii can actually be a more tax-friendly environment than most people expect. But this is where preparation matters enormously. Distributions from 401k plans or IRA withdrawals are generally taxable at Hawaii state rates, which are high. And Hawaii's exemption for retirement income generally applies to the employer-funded portion of retirement accounts. If you spent years contributing to a retirement plan, or both you and your employer put money into those contributions and they were mixed together, the tax treatment gets complicated and the exemption can be reduced or lost. The person I mentioned earlier who almost merged their retirement accounts before moving here was about to make exactly this kind of decision. One piece of information changed the outcome. The structure of your retirement accounts before you establish Hawaii residency can have lasting implications on how your retirement income is taxed here. Get clear on this before you move, not after your first Hawaii tax return tells you something that you wish you knew earlier. Quick note, this is general guidance. Your specific accounts and income sources will determine what actually applies to you. So please talk it through with someone who knows your full picture. The fifth surprise is the one that takes the longest to solve. Finding good local professionals in Hawaii is genuinely difficult. Not impossible, but harder than most places, and I would argue more important than most places. I'm not saying this to be dramatic. I am saying this because I live it. And I hear it in nearly every conversation I have with someone who is new to the islands. Hawaii has a well-documented brain drain. It is expensive to live here. Pay in most professional fields is genuinely lower than most roles equivalent on the mainland. So talented people leave, but that does not mean good professionals don't exist here. They absolutely do. but it means you have to find them intentionally, and you should start looking for them before you need them urgently. What I have found in my own experience is that the professionals worth working with here tend to be process-driven and proactive. They reach out to you. They are forward-looking, not just backwards-looking when it comes to filing at tax time. They are technically current on Hawaii-specific rules, and they have the bandwidth to actually be responsive. When you are vetting a CPA or an accountant here, those are the things that are worth asking about. Not whether they know Hawaii tax law in theory, but if they are willing to drive the conversation, not just wait for you to drive it. There's also an estate planning dimension worth naming. Your existing will and trust documents, they don't just become invalid when you move to Hawaii, but executing them here. Working with local banks, local financial institutions, local courts can be significantly more difficult. When those documents were drafted by an attorney who has never practiced here and have no relationship here. An estate planning attorney I spoke with put it clearly. The documents hold up, but getting them executed locally is a different problem. So if Hawaii is truly becoming your home, it is worth having your estate plan and your documents updated by a Hawaii barred attorney. The right team here, a local financial planner who knows the landscape, a CPA who understands GET and Hawaii-specific rules, a Hawaii estate planning attorney, it's not a luxury. It is the difference between navigating this transition clearly and figuring it out the hard way. So I want to speak to two different people before we wrap up here. If you are already here, some of these surprises may have already found you. That is okay. It's not too late. The right guidance now will still protect you from the compounding cost of getting these things wrong or right for the years to come. And if you are still planning the move, this is exactly the window that matters. What you do before you arrive changes everything about what happens after. The person I mentioned earlier who has been planning since 2015 is not going to arrive scrambling because he took the time to understand the landscape before he landed in it. That preparation is available to anyone. It just takes the time. It just requires starting early enough to actually use it. If you guys found this useful, hit subscribe. I keep putting out Hawaii-specific financial planning content, and I'd like to make sure you see it. And if you want to have a real conversation about your specific situation, whether you are already here or planning to be, that is exactly what we can help with at Claw Capital Partners. Head to clawcapitalpartners.com, linked in the description, schedule a discovery call, and I will see you in the next one.